Hello everyone, my name is David Silbiger. I'm a grains and cotton analyst here at Hedgepoint. And today Andy Ryan, Senior Relationship Manager for Cotton, will be joining me to make comments for World Cotton Day in this Hedgepoint update.
Hello, everyone. Thanks for joining us here for World Cotton Day. And we've had a lot of volatility in the cotton market over this past year, and especially the past 6 months. And it all started last spring and summer. We had a big run up in prices. Uh, the market went as high as $1.50 in some cases on supply concerns. There was a massive drought here in Texas, and the market really went up on concerns that cotton would be short in short supply this year. And then the market has fallen in the past couple of months, basically because of the prospect of demand destruction. And it all started here in the United States, but it's also the other big world supplier, Brazil, has also had some issues. David, what's the situation down there?
Yeah, those price movements are keeping producers in their toes since prices are falling for them. They are receiving less and less for their cotton, which pushes them to postpone their sales. And in the meantime, some input costs, namely fertilizers and fuel, are rising. So even though planting has not yet started here, it usually starts in mid-November. These price actions led by demand destruction is pushing farmers to try to adapt these new situations and may lead to some changes in acreage. And this whole situation with supply worries and now demand destruction is affecting prices worldwide and even in future contracts. How do you see future price movements? Do you expect some upward corrections?
Yeah, it's hard to say if the market's going to correct at this point on the upside. It seems like the macroeconomic shadow of inflation and high energy prices is really it's really playing wreaking havoc with farmers' plans. Here in the United States and in Brazil, the forward price of cotton for December 23 is around 75 cents. It's below the cost of production, and not just a little bit below the cost of production. It's a lot below the cost of production, some 20%, 20 to 25% in a lot of cases. So farmers really have to decide if they're going to plant cotton or if they can plant corn, soybeans. Here in the United States, they'll plant peanuts and rice as an alternative because the price of those commodities is still high. But yes, macroeconomics, the cost of fertilizers and energy, it's playing a big part for forward prices. And without demand destruction uh, going forward, we're gonna see a real shortage of cotton in the future.
But it's important to highlight that macroeconomic outlook for the world, especially for the developed world, does not look good for 2023. If you take into account several macroeconomic data points from manufacturing output, interest rates, inflation, bond yields, etc., the outlook overall is not good, and we are receiving ever more worrisome news from financial markets and the situation with Russia and Ukraine. Even though the latest data points regarding retail sales of textiles are not that worrisome, given they are more or less inside the expected seasonality, we are pretty sure that in the long run, this macroeconomic situation will take a toll on demand. However, there's a delay between decreases in retail sales and decreases in cotton sales at the beginning of this textile supply chain. And how do you see that the supply chain that stretches throughout the whole world is adapting to this macroeconomic scenario?
Yeah, well, we've got a couple very key points to make here. Number one, we've seen a severe drop off in U.S. export sales of cotton. This is kind of one of the first first indicators that we see of demand destruction. It's very hard to quantify the demand destruction until it actually happens because there's a great big lag, time lag between the time mills buy cotton and the time they deliver their products to the consumer. So the second thing is on a recent trip to Turkey, I visited around 9 to 10 textile mills, and they were all complaining about lack of orders for their products, and they are said to be running at around 60% of normal capacity. Now, Turkey, I would consider as one of the canaries in the coal mine, so to speak. It's a great indicator of overall global health of textiles. And right now, uh, they're really suffering. Turkey usually consumes all of the cotton that they produce and imports quite a bit more to satisfy their needs. This year, they've had a bumper crop of over 1 million tons. They're exporting. They're actually starting to export some of their cotton, especially to Pakistan, and that's a real sign that the textile mills in Turkey are not very healthy, and it is evidence of demand destruction. So whatever's going to happen going forward, it looks like there's a lot of evidence mounting. Where we are in the process, are we at the beginning of demand destruction? Are we in the middle, or are we at the tail end of demand destruction, and we're about to see a pickup in demand? It's hard to say at this point, but rest assured, the volatility in the cotton market prices, it's not going anywhere.
Indeed, the market is very volatile these days. So thank you for joining me in our discussion for World Cotton Day, and hope you like our content and stay tuned for the next Hedge Point updates. Thank you.
Thanks, David.